So guys, if your attempt is in September 25 or your attempt is in Jan 26 and you are worried about MCQs, you are worried about penalties, you are worried about due dates, you are worried about limits, you are worried how will I be able to revise everything in last minute. So I have got a perfect solution, and that to an absolutely English language. So, sir, first of all, welcome to this last minute revision video for all those who are appearing in the September 25 attempt and Jan 26 attempt. Sir, it is equally valid for both the attempts. What we are going to cover, sir, we are going to cover all those trickier points that have been either asked in MCQs or that are relevant for your better understanding towards the topic. This video will be in entire English, and I personally suggest that this video should be watched an hour before exam. So if you are the one watching this video an hour before exam, just let's cut the unnecessary things out and get back to the main topic. Before starting to main topics, are two basic things. First of all, if you have not liked the video, do like the video. Do subscribe the channel because I come up with such English content regularly, and if not regularly, I will come up with more such content regularly. Also, if you want this PDF has been circulated by me in my Telegram channel only. So if you have not joined that, the link is in the description box. Do join the Telegram channel also. First of all, sir, if you remember, as per section 44AD, sir, you are allowed to offer 6% or 8% of your total income. Yes, sir, we are allowed. We are allowed 6%, 8% of the turnover. We are allowed to offer as PGBP. But sir, 44AD is available only if your turnover is up to 2 crore rupees. But remember, sir, there was a catch. There was a catch. Sir, if your cash receipts are up to 5% of total receipts, sir, total turnover, sir, 5% of the turnover. In that case, sir, we are allowed, sir, 3 crore limit for 44AD. If you remember, so this was the case. Second thing, similarly, if we are offering for 44ADA, presumptive taxation under professional scheme, sir, in that case, we are allowed to opt for 44ADA if we have turnover or if we have gross receipts of 50 lakh rupees. But sir, if your cash receipts are up to 5% of total gross receipts from the turnover, sir, gross receipts from the turnover, sir, if your cash is up to 5%, then you are allowed 75 lakh rupees. Up to 75 lakh rupees, you can opt for 44ADA. Sir, we are clear with that. Sir, here, what my intention to tell you is, sir, we don't have to check 5% of total receipts, sir. Rather, 5% of the turnover is to be checked. If that is complied, sir, you are allowed higher limit for 44AD and ADA. Sir, if your turnover is up to 1 crore, then no issue. If your turnover exceeds 1 crore or 10 crore benchmark, then in that case, you are required to compulsorily get your books of accounts audited. Sir, we got that point. Sir, whenever we are opting 44AD, sir, what the issue is? Sir, whenever we are opting 44AD, sir, we have option 6% or 8%. Sir, when to choose 6%, on which turnover we have to apply 8%? Remember, whatever the sales proceeds have been received to you before the due date of ROI via account pay check, account pay demand of electronic clearing system is to be offered for 6%, and remaining has to be offered for 8%. If you have not received, if you have done credit sales, that has to be offered for 8%. But if you have received that money, that too by account paycheck, demand draft, electronic clearing system, and to prior to ROI, sir, then you can offer 6% income on such receipts. Sir, remember, yes, sir, we got that point. Okay, sir. Okay, sir. We got that point. Sir, what is the due date of ROI? Sir, normally due date of ROI is 31st July for every SSC. But if you are the one who is required to get your books of accounts audited, then for you, date will turn out to be 31st October. If you are a partnership firm who is required to get books of accounts audited, then due date for partners shall also be 31st October also. Sir, we got that point. We got that point. So there was a point. Sir, if your turnover exceeds 1 crore, then you are required to get your books of accounts audited. Right answer is normally yes. Sir, but if you are opting for 44AD, then you are not required. For example, your turnover is 1.5 crore, then you are not required to get your books of accounts audited. But sir, if your turnover exceeds 1 crore and you are not opting for 4480, that means you are declaring less than 6%, less than 8%, then you have to get your books of accounts audited. So this is an important catch. People most oftenly forget this point. So these were 6 important points. See, there might be many points that you already know. There might be certain points that you will be knowing for the first time. So everything has to be that has to coexist now. Not every point will be new, not every point will be known to you. So just have patience. All the pointers that I'm telling you now are very relevant for your MCQ knowledge. Otherwise, you might suffer solving MCQs. Okay? If you like the video now, if you like the video, then it will motivate me. If you want me to succeed a bit, sir, your subscription, only subscription I want. Okay, sir, we have subscribed to it. Okay. Now, sir, another point about 44 AD, what it says. See, 44 AD and ADA is available to individual. Yes, sir, it is available. Is it available to HF? Right answer is yes, it is available. Sir, is it available to LLP? Sir, no, it is not available. If is it available to firm? Right answer is yes, sir, it is available to firm. Sir, it is not available to firm. LLP, sir, it is not, sorry, 44 AD is not available to LLP companies. These are not eligible for 44 AD. But sir, 44A is eligible for every SS. Every SSC can claim 44A. Even a company, even an LLP can claim 44A. Sir, we got that point. Sir, remember, under section 44 AD and ADA. Sir, no expenditure is allowed. Right answer is yes, sir. No expenditure is allowed. Only you have to offer 8%, 6%, or 50%. Sir, that's that. No other expenditure is allowed. But are you allowed partners' interest under section 40B? Or partners remuneration? Right answer is no, you are not allowed. But sir, under section 44A, sir, no expenditure is allowed, but you are allowed partners interest and partners remuneration over and above the presumptive profit. Whatever the profit comes, you can reduce partners interest and partners remuneration from that profit. So we got that point. So apart from that, sir, what 44 AE is, how much income you have to offer. See, if you have any vehicle whose gross weight is exceeding 12,000 kg, then you have to offer 1,000 rupees per ton, per truck, per month. 1,000 rupees per truck, per ton, per month. So that is to be offered if your weight exceeds 12,000 kg, 12,000 kg. But if your weight is 12,000 or less than 12,000, then in both the cases you have to offer 7,500 rupees per month per truck, per month per truck. Okay. Remember, what essence of the topic is that if your weight is 12,000 kg, then too you have to opt for 7,500 only. Sir, that is the crux of the point. Sir, we got that point. We got that point. Absolutely, we got that point. Oh my God, sir, 9 pointers done. Arey, wow, sir, very fast. Hey, you are underestimating me. See, what happens is whenever you have any immovable property, sir, I have immovable property. If I have that immovable property held as capital asset, then whatever the profit I will be having, that will be charged to capital gain. Yes, sir. Sir, if I am selling it at a low consideration, sir, for example, if property is a stamp duty value is 1 crore, I am selling it for 50 lakh rupees, then stamp duty value is considered as full value of consideration. But sir, in that case, section 50C applies. 50C applies, sir. 50C applies. We got that point. But sir, if such immovable property is held as a stock in trade, then whatever profits arise are classified under that PGBP. And sir, if we sell at a price less than SDV, then section 43CA applies. Sir, in stock in trade, we do not have 50C, rather we have 43CA. So remember the demarcation between the sections. 50C applies to capital asset, 43CA applies to stock in trade. Sir, we got that point. Okay, sir. Whenever, sir, for example, I receive a gold chain from one of my students, or I receive a immovable property from one of my students, sir, when will such property be taxable under IFOS? Remember, so that will be only taxable when I hold such property, such asset as, sir, capital asset. If such asset is a stock in trade for me, it will not be taxed under IFOS. Say, for example, if somebody gives me gold and I have a gold jewelry business, it will not be IFOS. Remember, any stock in trade purchased at a lower cost will not be IFOS. Rather, if capital asset is received at a lower cost or at free of consideration, then in that case, it is treated as gift under section 56 to 10. So we got that point. Sometimes, sir, we sell our property. We sell our property. Sir, we have to consider SDV. Always we have to consider SDV while selling. Okay, sir, we got that point. Sir, which SDV to be taken? Sir, SDV on the date of registration or SDV on the date of agreement? Sir, which SDV to be taken? See, what happens? Provision says if you have paid any money on the date of agreement, on the date of agreement via account pay check, account pay demand, electronic clearing system, then take the SDV of agreement date. If you have not paid any money on date of agreement, then you have to take the registration dates SDV. So money paid on as agreement via account pay check, demand of electronic clear system, take agreement, otherwise take registration date. Sir, we got that point. Section 194I. So there is a section in which whenever you are buying a immovable property, and this immovable property is either SDV or, sir, consideration, either of two exceeds 50 lakh rupees. then whichever the higher number is, whichever is higher is, either SDV or either consider, whichever is higher is, on that amount, you have to deduct 1% TDS under section 194IA. You have to deduct. So in this section, whose TDS is to be deducted? Remember, so seller's TDS has to be deducted and the seller has to be resident. If seller is non-resident, you are not supposed to deduct TDS in this section. Sir, seller is non-resident, you are not supposed to deduct TDS. Only resident seller is liable for TDS. And remember, sir, buyer can be resident also, buyer can be non-resident also. That means deductor can be resident also, deductor can be non-resident also. Sir, we got that point. Case study number 4 or point number 49, let's say. Sir, if you are a company who wants to opt for 44BAB, sir, if you remember, there was taxation 15% given for any domestic manufacturing company. So that is only available if you commence your operation prior to 31st March 2024. Remember, if you have any company incorporated after 31st March 2024, you are not allowed 115 BAB. Remember, you are not allowed whatsoever. Sir, we got that point. Sir, whenever you are opting for 115 BAA, BAB, BAD, and BAE. What I said, BAA, BAB, BAD, BAE, not BAC, or not BAC, sir, you have to add 10% surcharge. Mandatorily, you have to add 10% surcharge. You have to add 10% surcharge, sir. Sir, we got it, sir. Remember, sometimes what happens is we file return by declaring income. We file return by declaring income of 10 lakh. Sir, while processing the return, our income got increased to 15 lakh rupees under processing of return under section 143(1) or intimation, I should say. After intimation, there happened our assessment under section 143(3), wherein our income was increased to 17 lakh rupees, that is 2 lakh more increment. After assessment, our income was again reassessed to 25 lakh rupees under 147 income escaping assessment. Provision says, sir, whatever the increment happens at the time of intimation, whatever increment happens at the time of intimation, sir, that is not levied, that is not charged to penalty. Sir, if my income is being increased on intimation, on account of intimation or on account of processing of returns, sir, no penalty is being charged on such increment. Only penalty will be charged in case of assessment, or sir, reassessment penalty will only be charged if income is increased on account of assessment or reassessment. Sir, what penalty? See, whatever the underreported income is. So, for example, my intimation income is 15 lakh and my assessed income is 20 lakh. So, in underreported income is 5 lakh. Whatever the taxes on underreported income are, such taxes are to be levied at the rate of 50% penalty or 200% penalty, depending upon if it is underreporting or if it is misreporting. If it is underreporting, then 50% of the taxes has to be paid as penalty. If it is misreporting, then 200% of the taxes is to be paid as penalty. Sir, we got that. So what does taxes means? So whatever the taxes are levied to underreported income plus surcharge plus education cess, sir, no interest on the underreported income. So point number 5, that is important, beautiful point for business test. See what happens is, sir, if I am a business trust, I receive certain income from SPV and distributed to the unit holders. I am a business trust, receive income from SPV and share distributed to the unit holders. Sir, what happens to interest income? Whenever interest income is received from SPV, it is exempt. If it is transferred to unit holder, if it is a resident unit holder, sir, it is taxable at the rate of slab and its TDS applicable is 10%. If non-resident unit holder receives such interest income, sir, it is taxable at the rate of 5%. TDS applies at the rate of 5%. Similarly, sir, for dividend, if I am the SPV receiving dividend, whatever I am receiving now from business trust, whatever this business trust is receiving from SPV now, it is always exempt. It is always exempt. So it is exempt for me, sir. But when this dividend is transferred to unit holder, sir, it is taxed in the hands of unit holder, depending upon whether this SPV has paid taxes under regular regime or it has paid taxes under 115 BAA. If this SPV has paid taxes under regular regime, then in that case, this dividend will be exempt in the hands of resident and non-resident unit holder. But sir, if SPV has paid tax under 115 BAA, then this dividend will be taxed at the rate of slab in the hand of resident unit holder. It will be taxed at the rate of 10% in the hands of non-resident unit holder. Sir, we got that point. So sometimes in the question of businesses, you are given with short-term capital gain on sale of developmental securities. Arey Baba, it is taxed at MMR. Sometimes you are given interest on unlisted debentures. It is also MMR. Sometimes you are given sir long-term capital gain on listed securities. It is also MMR. Sir, whatever given is sir MMR. Okay, sir, we got that point. Whenever a business has received any kind of rental income, it is exempt for businesses. Whenever this rental income is transferred to unit holder, it is taxed in the hands of unit holder at the rate of slab. Sir, we got that point. Sir, no 30% deduction. Remember, whenever rental income is being transferred to unit holders, sir, unit holders do not get 30% standard deduction. Sir, we got that point. Remember. Sir, whenever any person pays any money to non-resident ULIP, does the TDS is to be deducted? Yes, the TDS is to be deducted. Sir, whatever the TDS rate is, sir, always add 4% education cess to that TDS rate. If that TDS rate is as per Income Tax Act, sir, always add 4% education cess to it. But sir, if that TDS rate is not as per Income Tax Act, it is as per DTAA, then in that case, no 4% education cess is to be added. Sir, we got that point. Similar point is repeated whenever there is increase in increment on account of intimation, so no penalty is charged. But if increase is on account of assessment or reassessment, then penalty is to be charged on account of underreporting or misreporting, as the case may be. Sir, we have ULIP taxation. How ULIPs are being taxed? Sir, important point. If any of the ULIP is being issued prior to 1st Feb 2021, remember, if premium of such ULIP is below 10%, 15%, 20% criteria as prescribed under 1010D, so it is always exempt. It is always exempt. But if premium exceeds 10%, then ULIP was previously taxed under IFOS. If it was, if ULIP is bought prior to 1st Feb, if premium even exceeded 10%, then taxability was arising in the head of IFOS. But sir, with effect from 1st Feb 2021, sir, there happened a change. Sir, what change happened? Sir, if premium exceeds 10%, then again it is taxable under IFRS only. If exceeds 10%, then it is IFRS only. But sir, if premium is within limit, then you have to check if ULIP in totality, whether such ULIP individually or aggregate is up to 2,50,000 rupees in a previous year or not. If ULIP aggregating all is up to 250, then it is exempt. Majority will be exempt. But if any of the ULIP or aggregating some ULIPs, sir, premium exceeds 2,50,000 rupees, then whatever the ULIPs on which 2,50,000 has been exceeded, so that will be taxable, and that will be taxable under the head capital gain, and that too under section 112A. So we got that point. Sir, we have case study number 8. Oh my God, sir, very fast. We are doing case study 8 in just 16 minutes. Wow, sir. Ari, if you are liking the video, then if you are loving the video, then why are you not liking the video? Why have you not subscribed to the channel? I am very sad. You are not subscribing to the channel. Ari, sir, we got it. You are doing overacting a day before exam. No, sir, we will subscribe. Okay. Sir, if you are deducting TDS under section 194Q, remember, sir, the person whose TDS is being deducted has to be a resident person in this case also. The person whose TDS is being deducted has to be resident also. Or has to be resident only. But sir, buyer who is deducting TDS can be resident also, can be non-resident also. Sir, are we clear on that front? Yes, sir. Whenever we are deducting TDS under section 194Q, sir, TDS is always deducted on amount exceeding 50 lakh rupees. Whatever the amount exceeds 50 lakh rupees, that is only being used to deduct a TDS. Sir, we got that point. We got that point, sir. We got that point. Sometimes what happens is, sir, there happens to be a fight between multiple sections. For example, there happens to be a TCS under section 206C1 if I am selling coal, for example. And sir, on the similar transaction 194Q is also applicable. On similar transaction 206C 1H is also applicable. Sir, multiple sections are applicable. In that case, what to apply? Sir, always apply the third section. Whichever important section is, sir, that apply. Whatever the specific section is, that apply. If that specific section is not applied, then in that case, the general section under TDS will apply, and at last the TCS will apply. So this is important. This is being tested multiple times. Similarly, sir, if I am selling a motor vehicle, 1F will apply, then 194Q will apply, and then at last, sir, 1H will apply. So this is the sequence. Always prefer other sections, then 194Q, and at last 1H has to be seen. Sir, remember 194Q, like other sections also, sir, has to be deducted earlier in case of a account, in case of crediting the pay, or in case of actual payment, whichever is earlier, you have to deduct the TDS. Sir, we got that point. Whenever somebody has not furnished his PAN, sir, we have to deduct his TDS at a higher rate. Similarly, if he has not furnished PAN, we have to collect his TCS at higher rate. Sir, what is the higher collection rate? Sir, for TCS, it is twice the rate of respective section, or sir, 5%, whichever is higher. So remember, higher rate of 5% will not apply to TCS under section 1H. 206C1H will not, higher rate will not apply. Only 1% is the maximum rate for 1H. Also, if TCS is supposed to be collected a higher rate, maximum TCS that can be collected is 20% only. Sir, when more than 20%, you are not allowed to collect any TCS from anybody. Sir, we got that point. Similarly, for TDS, if somebody has not furnished PAN, then you have to collect his TDS at you have to deduct his TDS at a higher rate. Sir, what will be the higher rate? Sir, whatever the rate of respective section is, take that rate, or take 20%, whichever is higher. Remember, for 194Q, it is maximum 5%, and 194O, that is online e-commerce operators, it is also 5%. Maximum 5% rate would apply. Okay, sir. Sometimes what happens is, there happens to be an e-commerce operator, and there happens to be a seller, and there happens to be a buyer. Sale is facilitated via this e-commerce operator. But sir, goods are being directly transferred by seller to buyer and buyer directly paid to seller. So in that case, also this e-commerce operator is required to deduct TDS on the amount that has directly been given to the seller. Even though money has been directly being given to the seller, sir, the e-commerce operator is still required to deduct TDS on that amount also, because sir, it is duty of e-commerce operator only now. Okay, sir, we got that point. Sir, it is okay. 194 maximum TDS applicable is 5%. 194O, 194Q maximum TDS applicable is 5%. 1206C1H maximum TDS applicable is 1% in that case. See, if you remember, sir, 194C and 194J. If you remember 194C and 194J, there were two sections, sir, 194C and 194J. Sir, there were two sections. Yes, 194C and J. Sir, in both the sections, we had certain options. Sir, what options? Sir, only individual and HUF whose turnover was less than 1 crore or 50 lakh rupees in preceding financial year were not required to deduct TDS. They were not required to deduct TDS. Also, sir, under section 194C and J, even if your turnover exceeded 1 crore, if you were individual HUF, even if your turnover exceeded 1 crore, but in case, sir, you are taking these services for personal purposes, you were not required to deduct TDS. Remember, for personal purposes, if you take any services, you are not required to deduct TDS. If you remember, sir, there was. But sir, this exception was not applicable for 194H. Sir, if you are paying any brokerage, if you are paying any commission, that too for personal purpose, you are still required to deduct a TDS. Sir, for example, my turnover in last year was exceeding 1 crore. Sir, I am buying a house for which I have to pay brokerage exceeding 5 lakh rupees. Do I require to deduct TDS? Right answer is yes, sir. I have to deduct TDS. I am mandatorily required to deduct a TDS if my turnover exceeds 1 crore. Sorry, if my turnover exceeds 1 crore, sir, I have to mandatorily deduct TDS if I am taking it for personal purpose or if I am taking it for commercial purpose. That is irrelevant for 194H. Sir, we got that point. So sometimes what happens is, sir, if I am a resident person, sir, what happens is, sir, I am taking advertisement services from a non-resident. Sir, I have to deduct equalization levy. Yes, sir, I have to deduct equalization levy. But sir, if non-resident has permanent establishment in India and I am taking services to this permanent establishment, do I have to deduct TDS or do I have to deduct equalization levy? Right answer is no. I don't have to deduct equalization levy. TDS might be applicable, but equalization levy is not applicable in this case, sir. We are clear with that point. Similarly, sir, what happens most of the time, sir, whenever we pay for any personal purpose, for example, I paid for advertising myself as a Soyog boy to get married in US matrimony. I got myself registered. In that case, whatever payment I make for personal purpose, no TDS is applicable. Remember, what happens is, sir, under section 94B, if you remember, sir, 94B says if you are paying interest to your associate enterprise, sir, interest allowed will be only up to 30% of EBITDA. Whatever the 30% of EBITDA is, you will be allowed interest to that extent also. You to that extent only. Okay, sir. So this provision is applicable to third person also. Sir, if you are paying any interest to third person, then this 30% of EBITDA limit is applicable to third person also. If, sir, if your associate has given guarantee to this as third person, or if this associate has submitted a corresponding amount to this third person, then whatever interest you pay to this third person, sir, 30% limit shall apply to this third person also. Sir, remember, whatever the interest that has been disallowed. See, if you are allowed, sir, 30%, for example, you paid interest 10 crore, you are allowed just 8 crore, then whatever the excess interest that has been disallowed, sir, that can be carried forward for 8 years. That can be carried forward for 8 years. Sir, whenever in subsequent years, if you have remaining interest that can be set off, sir, you can set off this carry forward interest. For example, next year, sir, we paid interest 9 crore and we are allowed interest 10 crore. We are allowed 10 crore, we have just paid 9 crore. In that case, whatever excess allowed is, sir, we can set off this excess carry forward from this excess allowed in next year. Sir, we got that point. Sir, whenever we do secondary adjustment, sir, if you remember, we are supposed to do secondary adjustment. If there happens primary adjustment, we have to do secondary adjustment. Sir, we are clear with that, sir. We are clear with that. Sir, what amount of interest has to be paid in case of secondary adjustment? That matters the most. See, if secondary adjustment, for that matter, we have to check whether the transaction is denominated in rupees or whether the transaction is denominated in foreign currency. Okay. If transaction is denominated in rupees, sir, for whatever year you want to do, sir, for example, if you want to do secondary adjustment for previous year 24-25, take the SBI's rate on 1st April 2024. Take the 1st April's rate on 2024, sir. 1st April 2024 rate you have to take. And sir, add 3.25% to it. So that will be the rate through which you have to do the secondary adjustment. Sir, we got that point. So if your transaction is denominated in foreign currency and you have to do secondary adjustment for previous year 24-25, then in that case, sir, you have to take you have to take 6-month labor rate as on 30th September. Whatever the 30th September of the previous year is, sir, you have to take the 6-month labor rate on that day, add 3% to it, and that will be taken as the rate for which you have to do the secondary adjustment. Sir, we got that point. So if you don't want to do secondary adjustment, then you have an option to pay additional taxes. Additional taxes of 18% plus 12% surcharge plus 4% education cess. So this is the additional taxes you have to pay. Remember, sir. So the day on which you decide, or the day on which you actually pay the additional taxes, remember, up to that day you have to pay the interest. You have to pay the interest, sir. You are not relieved from the interest, sir. You are relieved from the interest the day on which you pay the additional taxes. Till that day, you are still liable to pay the interest amount. Sir, we got that point. Sir, another important point, sir. What happens is whenever we are transacting with any kind of a related party, or if we are whenever we are calculating arm's length price, always you have to remember, always take figure from unrelated party. See, if you are given a transaction in which we have sold goods to related, we have sold goods to unrelated party, always take figures from unrelated and come on to related party. If I am purchased goods from related and unrelated, sir, always take unrelated party. Always unrelated party. Unrelated party has to be taken first, and you have to do adjustments according to that. If you start from a related party now, in no case your answer will match from MCQ. Even your answer matches, your arm's length price adjustment matches, but you will not be awarded marks. Institute awards marks only on the basis of format you follow. Sir, what format Institute has asked you to follow? First of all is, sir, start with unrelated party and then come on to related party. Okay, sir, we got that point. Case study 11, what it says? Oh, sir, 10 case studies done in just 3 minutes. One case study. Wow, sir, wow. Sir, case study 11, what it says? Sir, whenever we withdraw money from bank, okay, we withdraw money from bank. Sir, if we withdraw money exceeding 1 crore rupees, then in that case, now our TDS will be applicable. 2% TDS will be deducted. But important catch is, sir, TDS will be deducted only on amount which is being withdrawn exceeding 1 crore. If I withdraw 1.2 crore, then TDS will be applicable on 20 lakh rupees only. Sir, we are clear with that point. Sir, if TDS is to be deducted for previous year 24-25, okay, sir. And we have not filed return for previous at 23-24, 22-23, or 22-21-22. For all the 3 years we have not filed return. Sir, all the 3 years we have not filed return. In that case, what will happen? Provision says, sir, our TDS rate will be higher. Sir, up to 20 lakh, no TDS will be deducted. But sir, exceeding 20 lakh, whatever withdrawals we do, sir, up to 1 crore, our TDS will be deducted at the rate of 2%. And if we withdraw exceeding 1 crore, then 5% TDS will be deducted. In this case, 194. And sir, we got that point. So there is another point relating to the withdrawals and deposit, what it says. Sir, whenever you have a current account, If you withdraw exceeding 1 crore, then TDS is applicable, you are aware. But sir, if you withdraw exceeding 50 lakh rupees from current account, or sir, you deposit 50 lakh or more in current account, withdraw 50 lakh or more or deposit 50 lakh or more, sir, that account is a reportable account, and that bank in which you hold the current account now is required to report it to income tax department under SFTs. Sir, got that point. Similarly, if you hold a savings account now, in savings account, limit is 10 lakh, not 50 lakh. First of all, limit in savings account is 10 lakh, not 15 lakh. Second thing, sir, whenever you deposit any sum in your savings account, always remember that the limit is only for deposits, no limit for withdrawal. Only your account will be reportable only and only when you deposit exceeding 10 lakh rupees. Otherwise, sir, it will not be a reportable account, sir. Whenever any of the person is supposed to file SFT statement or statement of financial transaction, if it is supposed to file, sir, then what is the due date? Provision says due date is 31st May of the assessment year, whatever the assessment year is for which he is filing SFT, sir, that assessment year, 31st May of the assessment year is the due date for filing SFT. But if such person fails to file SFT on the due date, then penalty of 500 rupees per day will be charged. Okay, 500 rupees per day will be charged. But till when it will be charged? Provision says, sir, as soon as day lapses, 31st May lapses, your date of filing the SFTs has passed, sir, you will be charged penalty. And you will be charged penalty till the date you receive the notice? No, sir. Till the date that has been mentioned in the notice. If you receive notice on 15 July, no charge, your penalty will be applicable for 500 only. Sir, in that notice, there will be a date mentioned till which you have to actually file the SFT. Sir, for example, date mentioned is 30th July. Sir, till 30th July, sir, you will be charged 500 per day. And if you did not file the SFT statement till the date mentioned in the notice, sir, you will be charged 500. Beyond that, sir, you will be charged rupees 100 per, sorry, rupees 1000 per day for every day delay in the SFT filing. Sir, another sometimes in the same question, we had a question, sir, if a bank, see, you might think that points are unrelated. Sir, why are you telling us unrelated points? Remember, a question in MCQ will not have related points. In MCQs, you will not be asked related points. If you find it unrelated, this is how unrelated examiner wants you to be. You don't want everything compiled together. Now you will not be able to apply things if you are not able to understand 5 different points altogether. If you are not able to correlate 5 different points altogether, how will you be able to attempt in exam? So try understanding it, because in exam these have been asked, these 5 pointers have been asked in single point. So if I keep these points in the respective chapter, you already know. But if I take different points from different chapters, so you might be having difficulty, and this is the difficulty that you will be seeing in exams. So you have to be prepared for this only. Sir, we got that point. Sir, if you remember, sir, we are any entity is not allowed bad debt. Bad debt provision for bad debt is not allowed to any entity. As per PGP provisions, no bad debt, no provision for bad debt is allowed. But sir, banks are the institutions in which provision for bad debt is allowed. And how much provision they are allowed? Sir, normally 8.5% of GTI. Whatever the gross total income is before claiming the deduction, sir, 8.5% of that GTI is allowed. Sir, we got that point. Plus, sir, if any of the bank has rural branches in rural India, and whatever the advances that have been given by the rural branches, sir, take 10% of that advances, that additional provision shall be allowed to banks. Sir, whenever there happens to be actual bad debt to banks, sir, always and always, this actual bad debts is first adjusted from the provision, and later on, this actual bad debts are being transferred to P&L, and you are allowed deduction on such things. Sir, whenever there happens to be a business reorganization, sir, amalgamation, succession, conversion, sir, demerger. Sir, what happens to depreciation on assets? Sir, sir, for the purpose of income tax, you have to ignore these reconstitutions. You have to ignore these changes. Sir, you have to assume that there has happened no reorganization, no amalgamation. You have to assume that. You have to calculate depreciation as it is, as this asset were used in the original entity for entire year. You have to assume that. Sir, after calculating the depreciation for the entire year, sir, you have to split this depreciation on the basis of number of days. The number of days for which asset has been used in old entity, and for the number of days the asset has been used in the new entity, you have to split these in number of days. So we got that point. Point number 51, what it says: whenever you are making a credit card bill payment, if you pay exceeding 1 lakh rupees via cash, if you pay credit card bill exceeding 1 lakh rupees in cash, sir, that becomes a reportable transaction. Credit card company is going to do SFT reporting. But if you pay credit card payment exceeding 10 lakh rupees in cash, exceeding 10 lakh, then too it is reportable. Sorry, 1 lakh for cash, 10 lakh via other channels, banking channels. Sir, if you pay exceeding 1 lakh in cash, your account will be reported. If you pay via other channels up to 10 lakh, then up to your account will be reported by the credit card company. Sir, we got that point. There is a point, sir. What happens is, sir, two entities become associate. For example, if I hold 26% in other entity, it shall become my associate. If I give loan to it, sir, and that loan exceeds 51% of the total book value of the assets, then in that case, sir, again, it shall become my associate. Sir, it is possible that two enterprise become associate with more than one reasons. It is not necessary that only because of one reason they shall become associate. They can become associate with more than one reasons. Sir, we got that point. Remember, sir, whenever we have an international transaction, for example, if I sold goods to Rachel, Rahul sold goods to Rachel. Sir, I did not report this transaction. I did not report this transaction, sir. If I did not report this transaction, my sales would not be there, sir. My profit would be reduced. In that case, sir, this would amount to misreporting, and sir, 200% penalty will be charged on the underreported income. Sir, whatever the underreported income is, the taxes will be charged, and whatever the taxes are charged, 200% penalty of those taxes will be charged to me. Sir, this is under section 270A. This is misreporting. But sir, what if we did not maintain the books of accounts? Sir, in that case, sir, penalty under section 271G will apply. If we did not furnish the books of accounts, sir, 271G, if we did not maintain, 271AA would apply. If we did not furnish the books of accounts, then 271GA would apply. Sir, remember these things. Sir, remember these things. If we did not furnish the international transaction, then in that case, misreporting would apply. Sir, if we did not maintain books of accounts, 271 AA will apply. Sir, 2% of the transaction value will be the penalty. And if we, sir, did not furnish the books of accounts to the assessing officer when required, then in that case, the 271G would apply, sir, 2% of the transaction value. So, did not reporting international transaction, sir, in that case, penalty would be applicable. Penalty would be applicable 200% as misreporting. But if we did not maintain books of accounts or did not furnish, then 2% of the transaction value. Sir, we got that point. Sir, what happens is, see, sir, for example, we have Rahul and we have Rachel. Sir, we sold goods for 100 crore and market value of these goods was 70 crore. Sir, I sold goods at a very higher price to Rachel. Sir, is Indian government losing anything? Right answer is no. The government is benefiting only. Government is benefiting from this transaction because more and more sales price, more and more profits, more and more taxes. So in this transaction, transfer pricing provision would not apply. Okay, sir, we got that point. Sir, case study number 30, in what it says, whenever you are paying any sum to partners. Sir, if you are paying any sum to a partner in the form of interest on partner's capital, interest on loan, interest on any kind of sum, sir, all in all, 12% of the value, 12% interest will be allowed on entire thing, whether it is interest on loan, whether it is interest on fixed capital, whether it is interest on regular capital. Sir, 12% will be allowed, and that too, sir, will be allowed on prospective basis. For example, if there were no clause for interest and during the year, there happened an amendment in the deed, which prescribes for retrospective interest payment. Provision says that will never be allowed. It will be only allowed from prospective basis. So that has to be mentioned in the deed. Sir, whenever there happens to be a retirement in the case of partnership firm, then whatever the retired partner's share of losses is, firm cannot carry forward that. Whatever the retired partner's share is, firm cannot carry forward that. Sir, similarly, in case of death, deceased partner's share cannot be carried forward. But here is the catch. If partner is deceased and his legal hire continue the business, in that case, sir, their share can be carried forward by the firm. If partner is deceased and their legal hire continue the business, then in that case, their share of losses can be carried forward by the, sir, partnership firm. Another important thing, sir, if there happens to be retirement or death, sir, these carry forward provision would only apply to losses. It would not apply to unabsorbed depreciation. Sir, we got that point. Section 94B applies to transactions that are done at arm's length price. Sir, what it says. Sir, for example, Rahul and Rachel. We have Rahul and Rachel. Rachel has given me loan of 1,000 crore. And this loan is being taxed at the interest is being charged 12%. Market rate of interest in India is 13% for Rahul. Sir, this transaction is at arm's length price only. Rachel is charging only 12%, whereas he would be charged 13% in India. In that case, sir, what would happen? Sir, still 94B provision would apply. Sir, whenever you are paying interest to associate enterprise, it is irrelevant that transaction is at arm's length price or not. Sir, you will always be allowed only 30% of the EBITDA. Sir, we got that point. Remember. Sir, whenever there happens to be a company which is being taxed under section 115BA, then whatever the regular incomes are will be taxed at 115BA only. So, for example, if a company has lottery income, sir, it will be charged to 30% only. If company has capital gain, it will be charged to 12.5%, 20%, as the case may be. Sir, whatever the special rates are, sir, special rates will apply. Sir, these 22% is applicable for general income, for example, dividend, house property, business income. This is applicable to the general income. So remember, if you have any kind of royalty income which is taxable under section 115 BBF, then sir, 10% tax rate would apply against that income. So royalty is taxed at gross basis, sir. No deduction is allowed on that income. Whatever, sir, income you receive, sir, that is taxed on gross basis. Sir, whatever expenditure you incur, sir, are not allowed on that. Sir, but if you have any kind of losses, then you can still set off the losses against that income. There is no issue as to setting off of losses. Sir, you can still set off losses from that income. Sir, we got that point. Sir, Chapter 6 deductions are normally not allowed in new tax regime. Whatever the new tax regime is, 115 BAA, BAB, BAC, BAD, BAE. So normally under these new tax regimes, sir, we do not have any Chapter 6 deduction, but there are 5 deductions which are applicable in new tax regime. Sir, what are those deductions? So ATCC2 if any employer contributes to your pension fund. ATCCH if any Agniveer contributes to Agnipath scheme. If we have any kind of new employees, AT0000 whatever the new employee costs are. ATLA if any of the entities registered under IFSC, or sir if you have ATM, sir intercorporate dividend. If you receive dividend and pay dividends, sir you are allowed deduction on those things even in new tax regime. Sir, are we clear on that point? So point number 61, what it says. See, whenever you apply MAT, it applies to foreign companies also. Remember, whenever we have foreign company, MAT is applicable to such foreign company also. Point number 62. See, whenever income is being taxed as per Income Tax Act, you always have to add surcharge. You always have to add education cess. But if income is taxable as per DTAA, remember whatever the rate given in DTAA is the final rate. No surcharge is added, no education cess is added. Sir, Pinky promised that we will not be adding education cess whenever we are taxing income as per DTAA. Sir, we got your point. Sir, what happens is now sometimes whenever a non-resident or foreign company invests in unlisted shares of Indian company, sir, their capital gain is taxed at a rate of their long-term capital gain is taxed at the rate of 10%, 12.5%. So such taxes are exclusive of indexation. Sir, no indexation is given on such capital gains. Along with that, sir, no other benefits are given on this capital gain. Nothing else, nothing other benefits are given on this case. But remember, sir, whenever a such non-resident or foreign company has this kind of capital gain which is being taxed at the rate of 10% or 12.5%, sir, MAT is not applicable on this capital gain because, sir, it is less than 15%. Now we have already studied if a foreign company's income is less than 15% taxable, then in that case MAT on such income is not applicable. Sir, we got your point. Sir, we got your point. Point number 64. Sir, what it says. See, if you remember, sir, we have 6 provisions: 194H, 194I, 194J, 194A, 194H, 194R, 194C. In all these 6 sections, sir, who are the pairs? Sir, pair is the special pair. Who is the pair, sir? Any individual HUF whose turnover in preceding financial year is up to 1 crore or 50 lakh rupees. Except these people, everybody is a pair. Except these people, everybody is a pair. Sir, remember, there is a conclusion drawn from this pair. Sir, sometimes what happens is a company is newly incorporated. If a company is newly incorporated in previous year 24-25, sir, is it required to deduct TDS under section 194 HIJACR? Right answer is yes. This turnover limit of preceding financial year is to be checked only for individual HF. If we have companies, sir, no preceding financial turnover is to be checked. Every company is required to deduct TDS under section 194 HIJACR if they pay any kind of brokerage service, if they pay any kind of interest, they pay any kind of professional fees, they are mandatorily required to deduct a TDS in whatsoever case. Sir, we got your point. Remember, see, this previous preceding year turnover is limit to be checked for individual HF only, for no other person. Sir, we got that point. We got that point, sir. We got that point. See, if you are any individual whose turnover exceeds 1 crore, is required to get your books of accounts audited. Sir, but if your cash receipts is less than up to 5% of the total receipts, or if your cash payments are up to 5% of the total payments, in that case, sir, your 1 crore limit would become 10 crore limit. Sir, we are aware of that fact. But sir, in this case, we have total receipts. Total receipts includes all sales receipts, all capital gain receipts, all IFOS receipts, all rental income, all the income that you have that are being received, sir, is considered in this 5% limit, in this total limit. Similarly, all payment would include if you have purchased any asset, if you have purchased any, if you have paid any rent, every payment would be included. So then only your limit of 1 crore will become 10 crore. So we got your point. We have section 2 section SS, 2 section ST. So what it says? See, if you receive any sum exceeding 2 lakh or more, if you receive any sum via cash, sir, on account of single person, single day, on account of different person but single transaction, but sir, on account of different transaction but via single event, if you receive 2 lakh or more via cash, sir, it is penalized under section 2 section SS. It is a violation to section ST. It is a violation to section 2 section ST. Sir, we are clear. Sir, whenever you do such violation, sir, such violation is being taxed under section, sir, 271 DA, and 100% penalty is being charged. We are clear with that point. Sir, that penalty is being charged by Joint Commissioner. I personally think that this Joint Commissioner word is important. This might be asked in exam. So you must be very careful on this point. Sir, very much clear. Very, very, very much clear, sir. Point number 67, what it says. Sir, whenever we convert any capital asset into stock in trade, sir, we are aware. Okay. Whenever conversion takes place, sir, from that day, we have to invest in capital gain bonds within 6 months from the date of conversion. Conversion? No, sir, no. What the concept is, whenever any asset is being transferred, to claim exemption on such assets, you have to buy the bonds within 6 months. Yes, sir, we have to buy bonds within 6 months. But sir, if capital asset is converted into stock in trade, sir, do we need to buy within 6 months from the transfer? Right answer is no. Sir, you have to buy the assets from the actual date on which stock in trade is being sold. You have to consider 6 months limit not from the date of conversion, but rather you have to take the limit of 6 months from the date on which such a stock in trade is being sold. Sir, we got that point. We got that point. Point number 68, what it says. Sir, if your business is of letting out, if you have property, you let it out. Sir, you give it on rent. Sir, if your business is that, then if you let out any kind of commercial premises, sir, if you have given your premise for shops, if you have given your premises for go downs, sir, in that case, whatever rent you receive now, that will be your business income. That is clear. That is very much clear. But sir, if you have any house that you have given for residential purpose and you have let out, and your business is of letting out, provision says in that case, it is not PGBP, it is house property. Even though your business is of letting out, sir, it will not be PGBP if you are letting out any residential house property. It will be always house property income. We are clear with that point. Point number 16, what it says. Sir, whenever you receive any kind of rent, okay, whenever you receive any kind of rent, whatever the municipal taxes you have paid, you are allowed deduction on that. But sir, what if tenant pays the municipal taxes? Provision says deduction is not allowed on that. You have to pay the tax, you have to pay the municipal taxes to get deduction. You are not allowed deduction on the taxes paid by the tenant. Sir, we are clear on that point also. Sir, 194 IB, what it says. See, what happens is, sir, there are certain instances in which 194I is not applicable. Sir, 194I, that is TDS on rent, is not applicable. Sir, there are two instances. If your turnover is less than 1 crore in preceding financial year, or you are taking that property for personal purpose, sir, it is not applicable. 194I is not applicable. Sir, in those cases, 194 IB was applicable. Wherever you pay rent exceeding 50,000 rupees in a month, sir, you have to deduct TDS under section 194 IB. Sir, we are clear. Sir, when TDS liability used to arise, it used to arise at the time of either end of the financial year or sir, end of the tenancy, whichever comes earlier. Either it has to be end of the financial year or end of the tenancy, sir. We are clear on that point. Sir, we have to deduct the TDS at the rate of 5% or 2%. Depending upon date. If TDS is to be deducted prior to 30th September, then 5%. If TDS is to be deducted later on, then it has to be 2%. Sir, we are clear on that point. Sir, but the issue here is, sir, if we have paid rent throughout the year and we have to deduct a TDS on 31st March, sir, will the rate be will the rate be 5% for half of the year, or will the rate be 2% for half or remaining half? Right answer is no. Entire TDS will be deducted by a single rate only. The date on which you are supposed to deduct TDS, rate of that date you have to choose. See, if you have to deduct TDS on 31st March, then TDS applicable would be 2%. If you are deducting TDS in December, TDS applicable would be 2%. If you are deducting TDS in October, so 2%. But if you have to deduct TDS prior to September or in September, then 5% rate would apply. See, in proportionate period, you don't have to deduct TDS. So entire TDS is to be deducted with single rate only. It depends upon the date on which you have to deduct the TDS. So we got that point. Point number 71. Ori Baba, in just less in this time, 71 points done. If you have not subscribed to channel, even till now you have not subscribed to channel, you don't want me to succeed now. You really don't want me to succeed now. Very bad of very bad. Sir, what it says, sir, what it says. Whenever you are opting for section 35AD, okay, 35AD, any kind of scientific, any kind of specified business, whatever the capital investment you do, sir, 100% reduction on that. Remember, whenever you buy any asset, remember any time of plant and machinery, any asset you buy, so that should be bought via account pay check, account pay demand draft, or any electronic clearing system. Any asset purchased in cash is not allowed as deduction. And second thing, any kind of land purchase or any kind of goodwill purchase is not eligible for deduction. Sir, we got that point. Point number 72, what it says. Sir, if you have any specified business, sir, it is eligible for section 35AD. We have another scientific specified business. It is not eligible for 35AD. It might have been started earlier. So there might be many situations because of which it is not eligible, but it is still specified business. Can their losses be set off? Right answer is yes. If two businesses are specified business, sir, one of them might not be eligible for 35AD. Still, it is eligible for losses set off. Sir, we got that point. It is very simple point. Sir, another very beautiful point which you might do wrong while solving the question. Sir, most of the students do this thing wrong. Whenever we happen to calculate AMT, okay, sir, we have to calculate adjusted total income. For that matter, we have net profit. We have to add 3580 deduction to it. We have to add 10AA. We have to add chapter 6A part C. Sir, all the things we have to add, sir, we have to add. We normally add this thing. But sir, after that, we have to reduce the depreciation. Whatever the depreciation that should have been allowed on this 3580 assets, the depreciation is to be reduced. And sir, remember, sometimes it happens that any of the entity on which you are calculating, sir, might be eligible for additional depreciation also. So in that case, additional depreciation is to be reduced also. Then only you will arrive at adjusted total income. And on that adjusted total income, you have to charge AMT tax. Sir, remember this thing. This is very important point. Most of the students do wrong while solving this type of question. Sir, 74, sir, it is repetition of any repetition of point that we have already studied. If somebody has not, if you are if you are supposed to deduct TDS of a person under section 194Q and he has not furnished the PAN, then in what, then in that case, a higher rate would of 5% would apply. And if you want to collect a TCS in that same case, sir, higher rate of 1% would be applicable. 194Q, higher rate 5%. 206C, 1H, higher rate of 1% would be applicable. Point number 75. Sir, whenever you are supposed to do foreign remittances, sir, what is the applicability of TCS in that case? See, whenever you are remitting, the authorized dealer through which you are remitting is supposed to deduct or collect the TCS. Sir, we got that point. Whenever we are remitting up to 7 lakh rupees. For any purpose we are remitting, sir, no TCS is applicable. No TCS at all is applicable. But sir, if we are remitting beyond 7 lakh, then in that case, what happens? We have to check for what purpose we are remitting. If we are remitting for the educational purpose, that too out of educational loan referred under section 80E, then 0.5% will be TCS rate. Sir, if we are remitting for educational purpose out of our own savings, out of any other thing, sir, in that case, sir, 5% TCS would be applicable. Or sir, if we are remitting for any other purpose, like gifting purpose, like travel purpose, like health purpose, in that case, sir, 20% TCS is applicable. Remember, sir, up to 7 lakh, for any purpose you are remitting, no issue. Exceeding 7 lakh, you have to check the purpose. If it is educational purpose, out of educational loan, then 0.5% TCS is applicable. If you are remitting for educational purpose, otherwise, sir, 5% is applicable. At last, sir, if you are remitting for health purpose, gifting purpose, traveling purpose, in that case, sir, 20% TCS is applicable. Sir, if you buy any kind of overseas tours and package program, for example, we had discussed that if you want to go to Pakistan, okay, and that travel guide is charging 10 lakh rupees, then for first 7 lakh rupees, 5% TCS is applicable, and for remaining 3 lakhs, sir, 20% TCS is applicable. So 20% TCS over and above 7 lakh worth of package is applicable. Sir, we got that point. Sir, point number 77, what it says. Any kind of LLP. Any LLP is not eligible for 44AD and AD. Any LLP is not eligible for 44AD, AD. Sir, try repeating after me. It is not eligible for 44AD, AD. Sir, we got that point. Sir, but can partners opt for 44AD, ADA for their personal businesses? Right answer is yes. If LLP is disallowed to carry on 44AD, ADA business, their partners in their individual capacity, in their personal businesses, can still opt for 44AD, ADA. Sir, we got that point. Sir, under section 10AA, if any of the company, if any of the entity has been started on or prior to, sir, previous year 1920, in that case, sir, whatever the deductions that you arrive, sir, always multiply 50% to it, because 50% deduction will be only available to you. But sir, if any of the business has been commenced from 2021, sir, in that case, sir, 100% deduction will be given to you. Sir, remember, 100% deduction would be given to you. And a business has been commenced on, sir, on or after for 21-22, sir, no deduction would be allowed. No deduction whatsoever would be allowed, because sir, last date to incorporate or last date to start your business was 31st March 2021 to claim deduction under 10AA. Sir, we got that point. Later on, sir, we have MAT rate. Sir, can you all repeat MAT rate after me? Sir, if any of the company is liable for MAT, sir, 15% will be the MAT rate. If such company is located in IFSC, sir, then MAT rate would be 9%. If any of the person is liable for AMT, so AMT rate is 18.5%. If such entity is located in IFSC, then AMT rate is 9%. And sir, if such entity is a cooperative society, sir, cooperative society, sir, try repeating after me. Write down in comment section. Sir, if any cooperative society is liable for AMT, then 15% is the AMT rate. Sir, very important point for examination purpose. Point number 80. Oh, why? Oh, wow. Smoothly, halle, say we came on to 80th point, sir. How to calculate tonnage income. Sir, for first 1000 tons, you have to take 70 rupees per 100 ton. From 1000 to 10,000, sir, take 53 rupees per 100 ton. From 10,000 to 25,000 tons, sir, take 42 rupees per 100 ton. And as it exceeds from 25,000 tons, sir, you have to take rupees 29 per 100 ton. That is how tonnage income is calculated. Sir, whenever you opt for tonnage taxation, always remember, whatever the book profit is as per books of accounts, you have to take 20% of that book profit to tonnage reserve account. Whatever the shortfall you do, sir, for example, instead of 20%, you took only 15%, then 5% is the shortfall. Or, sir, whatever misutilization you do, sir, that corresponding disallowance will be taxable in relevant shipping income. Relevant shipping income is nothing but PGVP income. Whatever PGVP income is arrived, sir, proportionate PGVP income would be taxable. Sir, for example, our PGVP income is 10 crore and we misutilize 1% of the 20%, then 1 out of 20% of this 10 crore would be taxable in our hands if we misutilize, or, sir, if we did not create proper tonnage reserve account. Sir, we got that point. And, sir, at last, this 8 point number 82, what it says, sir, if you are any kind of aircraft business, if you are any kind of aircraft business referred under section 44BBA, or if you are any kind of shipping business referred under section 44B, so in these two cases, you mandatorily have to offer income as per presumptive taxation. Got it, sir. Sir, on that income, sir, you have to offer 5% or 7.5% as your PGBP. Sir, we are clear on that, sir. But what is the specified sum? Whatever the freight that has been received in India, that has to be taken. And whatever the goods that have been carried outside India, wherever the freight received, sir, that has to be taken. So two things. Freight received in India. Second thing, freight accrued in India. Freight accrued in India imply, sir, whatever the goods that have been taken outside India, sir, wherever the freight is received, we don't care, we have to add it. Sir, freight received in India, freight accrued in India would be specified sum, and of the specified sum, 5% or 7.5% is to be taken. Sir, we got that point. Sir, point number 83, what it says. See, as per section 24B, if you remember, sir, as per section 24B, sir, if you pay any kind of interest on your house property, if you pay any kind of interest on your house property, you are allowed deduction of such interest, sir, we are aware of that. Sir, remember, if you pay any kind of interest now, sir, payment on payment basis it is allowed, and on accrual basis also it is allowed. If you have if you have not even paid the interest on house property now, sir, you are allowed deduction on that also. Payment is not necessary under 24B. Sir, under chapter 6 it is necessary. But under 24B, payment is not necessary. Even accrual basis also you can claim the deduction also. So 24B deduction can be only claimed, only claimed if construction is complete. If construction is not complete, you are not allowed 24B. Sir, we got that point. Sir, important point. Sir, what happens sometimes now? What happens sometimes? See, we have to give security deposit. For example, if I am getting an electricity connection, I have to give security deposit. Sir, on security deposit, I am not given any kind of interest. So government is mandated. Government is going to charge interest on me. Whether government is going to charge any interest on that notional deposit, right answer is no. No notional income is being charged in my hands if we have given any interest-free deposits. No notional rent, no notional interest is being charged in our hands. Sir, we got that point. This is an important point. See, if we have any kind of non-resident and we have any kind of resident in India or non-resident in India, sir, no issue. But if non-resident wants to buy any immovable property in India, if non-resident wants to buy or sell any kind of immovable property in India, and he takes help of any kind of resident person or non-resident person, so this resident person or non-resident person who helps out such non-resident, so they shall become agent. So they shall become agent. Always they shall become agent. If any of the non-resident or resident helps out the other non-resident, sir, in buying or selling properties in India, sir, they shall become agent. Whatever the income they accrue, sir, that shall be taxable in India. Sir, sometimes what happens, sir, this is very logical point. Try understanding it. Sir, for example, there is a father. Okay. And, sir, father has a property. This property yields rent. What this father did, he transferred this house property in the hands of the minor child. Just so that, sir, this income would be taxable in the hands of the minor, but sir, father would be deemed owner. Okay, sir. Later on, what happened is, sir, this minor child had another mother. And sir, this income and mother had more income than father. Father thought gifting this property into the minor child, clubbing provisions would apply and it would be taxable in the hands of mother because mother had more income. Provision says this is not allowed. Whenever you have any property, you are giving it to your child, sir, you are the deemed owner. Sir, clubbing provisions will not apply in this case. Sir, clubbing provisions of parents will not apply. Sir, you are the deemed owner now, so it will be taxable in your hands only. It will be not taxable based on whose income is higher. It will be rather taxed on the basis of sir, who is actually the deemed owner. Sir, we got that point. Case study 23, sir, we don't have any special point. Case study 24, it is important. See, we have three sections. Sir, 133B, where assessing officer has power to collect information. 133A, where assessing officer has power to survey, and we have 133A2A, sir, TDS TCS survey. In all the three cases, sir, do they require prior approval? Sir, under 133B, sir, no prior approval is required. Under survey, sir, prior approval of CCIT. or DGIT is required, sir. Without that, they cannot do survey. And similarly, in TDS survey, sir, they require prior approval. Sir, prior approval is mandatory. Sir, can they impound books of accounts? Right answer is, sir, in 133B, sir, they cannot impound books of accounts. Under survey, can they? Yes, sir, they can. Sir, under TDS survey, sir, they cannot impound books of accounts. Sir, what is the entry restriction? Try remembering this entry restriction. This is important. Under, sir, power to collect information, in they can enter your business premises. They can enter only business premises, sir, only during business hours. Only during business hours they can enter. During survey, if they want to enter your business premises, so they can only enter during business hours. If they want to enter other places, so they can only enter after sunrise, before sunset. After sunrise, before sunset. And sir, if they want to do TDS survey, so they can enter only business premises, and that too after sunrise and before sunset. Sir, here comes an issue. So normally business premises is normally business hours, but in TDS survey, sir, it is after sunrise but before sunset. That is the cases. So that is what confuses every student the most, and ICA exploits this confusion, and ICA asks most questions from this topic only. Point number 90, sir. Till when a notice for scrutiny assessment can be issued? See, as soon as you file the return, let that financial year end, add 3 months to it, sir. That would be the due date for scrutiny notice, new scrutiny notice. Sir, we got that point. See, remember. What happens is, sir, most of the time, whenever you happen to have a scrutiny assessment going against you, and sir, assessing officer wants to do income escaping assessment against you again, in that case, sir, assessing officer is not required to issue 148A notice. Assessing officer is not required to issue show cause notice to you. If there happens a scrutiny assessment, there happens a scrutiny assessment. And assessing officer wants to reassessment. Sir, is he mandatorily required to issue show cause notice? Right answer is no, he's not required. He is not mandatorily required to issue show cause notice. Okay. Sir, remember, whenever your income is added on account of misreporting, you happen to do misreporting, sir, taxes are being charged, 200 penalties being charged. Sir, under this penalty, sir, no immunity is given. Whenever there happens to be any misreporting, sir, no immunity is granted against that income or against that tax, against that penalty. Sir, we got that point. Point number 93, what it says. Sir, for a trust can claim two of the sections. It can claim either 1023C as an institute, or it can claim 12AB as a registered trust. So they cannot claim both. They have to claim either of two. They cannot claim both. See, if trust spends any of the money on the specified person, so such application is not allowed. That application is not allowed. So that explanation, that application that you have done, sir, that is taxable in your hands. It is taxable in your hands as per 115 BBI. Sir, we got that point. 30% tax rate would apply. And so such expenditure is even considered as violation under section 271 AAE, and sir, penalty is being charged amounting to 100% of the violation. Sir, 100%, that too for the first violation. Sir, if you do subsequent violation, then 200% penalty is being charged. Sir, it is important. Sir, we got that point. Sir, for example, we have any institute which is falling under the category of 1023C. We have any institute, and it has school whose receipts is 4 crore. It has hospital whose receipts is 3 crore. So individually it is less than 5 crore, but aggregate it is exceeding 5 crore. Will they be required to get registration? Right answer is yes, they have to get registration done. So if their turnover would have been 5 crore in aggregate, then no registration was required. But their aggregate turnover exceeded 5 crore, then they require registration, and that too under 12AB they have to get themselves registered. Sir, we got that point. Section point number 96, what it says. See, for example, I do foreign remittances. I do foreign remittances from SBI. I do foreign remittances from ICICI. I took two banks from which I am doing foreign remittances. So the limit of 7 lakh would apply to individually. Right answer is normally yes. Normally 7 lakh limit is applied to each of the authorized dealer. Okay, sir. But sir, what if I am doing remittances through SBI, and later on, whatever the remittances that I have done through SBI, sir, I am reporting these remittances to ICICI Bank. So provision says, sir, you have to club both the banks for the purpose of 7 lakh limit. See, if both the banks know about each other, both the banks know about the details of the foreign remittances made by me, in that case, you have to club the remittances for the purpose of 7 lakh limit. Sir, we got that point. Sometimes what happens is now, you have to remit money for day-to-day purpose, for the educational purpose. Sir, we did not get. So, if your child is studying, and you are remitting for a stationery purpose, you are remitting for books purpose, you are remitting for some kind of additional fees, like for example computer fees. Sir, you have to give day-to-day expenses now for somebody, and the day-to-day expenses correspond to educational purpose. So in that case, sir, for such remittances also, sir, 5% TCS would be applicable, not 20%, but 5% would be applicable. So what happens sometimes? For example, I have an aunt. I have an auntie. I have an aunt who comes to India. She's an NRI. She comes to India and she buys a package. She is from Canada. She comes to India. She buys a package. She buys a package. Overseas tours and program. She buys a overseas package. For example, to Nigeria. Provision says if any non-resident comes to India, buys any overseas package, sir, will provisions of 1G would apply? Would the provision of TCS would apply? Right answer is no. These provisions are not applicable to non-residents. Sir, we got that point. Under section 80 TTA, remember. Sir, if you are resident, non-resident, not relevant. Sir, whenever you receive any kind of interest on savings account, sir, you are eligible for 80 TTA. But sir, if you want to claim 80 TTB, you have to be resident and you have to be senior citizen, then only 80 TTB is allowed. Sir, we got that point. Point number 100, what it says. See what happens. Whenever income is increased on account of intimation, sir, no penalties being charged. Sir, we got that point. Next point, sir, what it says. See, if you import any kind of software, okay, whatever payment you do is a royalty. Whatever payment you do is royalty. But sir, whenever I am importing that software, I am selling it as it is. I am just reselling that software. Sir, I'm not actually providing the services of a software. I am just doing the reselling purpose. Sir, in that case, it is not considered as royalty. Remember, what you try to do is, sir, if you import goods, sir, if you make payments, sir, it is normally, if you import software and make payment, it is normally royalty. But sir, if you import software and resell it without any modification, without any changes, sir, it is not considered as royalty as per DTAA. As per Income Tax Act, it might be royalty. As per Income Tax Act Section 9, Subsection 1, Clause 6, it might be royalty. But sir, as per DTAA, it is not considered as royalty. You have been asked 2 times this thing, sir. You have to remember this point. Sir, foreign company, surcharge applicable, sir. You are already aware, sir, if foreign company happens to have income of 1 crore, sir, no surcharge is applicable. If foreign company has income exceeding 1 crore but up to 10 crore, then 2% surcharge is applicable. If foreign company has income exceeding 10 crore, then 5% surcharge is applicable. Okay, sir, we got that point. Sir, if any of the assessee has income under section 115A, that means he has interest, he has dividend, he has royalty, he has FTS. And sir, TDS on that is already deducted, then in that case, he is not required to file return of income. Sir, we got that point. Now we have 104. Sir, complete NRI taxation has been covered in this point only. Entire NRI taxation I have covered, sir, what this point says. See, if any of the person is Indian citizen or person of Indian origin, plus he is a non-resident, he shall be considered as NRI. What benefits he possesses, he receives as NRI, sir, remember. Sir, whatever the foreign exchange assets he has, he is given a special privilege on those foreign exchange assets. All the other assets, all the other income would be taxed as per normal provisions of Income Tax Act. But sir, if he has forex asset, sir, he will be governed with special provisions on those forex assets. Sir, what are forex assets? Sir, shares of Indian company, it can be private company, it can be public company. Debentures of any public company, sir, deposits of public company or any government securities. These 4 assets are considered as forex asset. Sir, whatever LTCG happens to be on this forex asset, so that shall be taxable at the rate of 10% prior 20th of July, and sir, it shall be taxable at the rate of 12.5% after 23rd July. So remember, 1.25 lakh benefit is not available. If such foreign asset if such forex asset is a listed security, sir, 1.25 lakh is not available. If NRI is claiming benefit of these provisions, sir, 1.25 lakh benefit is not given to him. Got it, sir. We got it. Sir, if he, while calculating the capital gain, sir, any transfer expenses allowed? Right answer is yes. Any indexation allowed? No. Any first proviso to 48? Sir, it is allowed. Sir, everything is allowed. Sir, whenever capital gain happens, long-term capital gain happens, sir, he is eligible for exemption under section 115F. Whatever the capital gain is multiplied by cost of new asset divided by net concession is the exemption that he is going to get. Sir, whatever the short-term capital gains, sir, it will be either 15%, 20%, or it can be slabbed depending upon the type of asset that he's selling. And sir, whatever the income that happens to be on account of this forex asset. For example, he has shares, so he might be receiving dividend. He has deposits, so he might be receiving any kind of interest. In that case, such interest is taxable at the rate of 20%. So this is the income on forex asset. Sir, any expenditure on such income is not allowed. Whatever expenditure that he has incurred on such income is not allowed. Sir, we are clear. Whatever other income. See, this is important point. See, if NRI invests in any of the debentures, if those debentures are of public company, then NRI would be covered in this provision. It shall be considered as forex asset, so it shall be taxed at the 20%. But sir, if NRI deposits, NRI buys securities, NRI buys securities of a private company, private debentures, private company debentures, then what happens? Sir, it shall be covered under section 115A. It shall be covered under section 115A because ultimately all the conditions of 115A are satisfied. If foreign currency comes to India and he is investing in private limited company, debentures of private limited company, so 115A is applicable. So in that case, the 20% tax rate would apply. So 20% tax rate would apply. So we got that point. And whatever the other incomes are, so rental income, capital income, whatever the income, other income are, so that shall be considered whatever the regular provisions you have studied as per those provisions only. Sir, if NRI has only this forex asset capital gain and forex asset income, in that case his TDS would be deducted. If TDS is deducted, then he is not required to file ROI. Sir, we got that point. Point number 105. See, whenever I am supposed to do a remittance on which I am supposed to deduct equalization levy, what happens is that I have to deduct equalization levy. If I fail to deduct, then in that case, sir, 100% of such expenditure will be disallowed. Second thing, in addition to that, sir, I am charged interest. Sir, if I am charged interest, sir, from the due date of payment of equalization levy till the actual date of payment, sir, 1% per month and part of the month interest would be charged in my hand, sir. I got that point. We got that point, sir. Along with that, sir, you are being penalized, sir. What is the amount of penalty? Sir, for non-deduction, sir, whatever the amount of equalization levy is, sir, that will be charged. That whatever the amount of equalization levy is, sir, that will be the amount of penalty that will be charged in your hands. And sir, if you are not paying, if you are not doing any payment, sir, in that case, 1,000 rupees per day penalty would be charged. 1,000 rupees per day, subject to maximum of equalization levy, would be charged as penalty. Sir, we got that point. Okay, sir, we got that point. Point number 106. Sir, only 5 or 6 important point left. 10 important points left. Just have patience because every point. You might think it is not interrelated, but this is how they are being asked in exam. Nothing related is being asked. So for that matter, you need to have a very active brain to process all the information. Sir, if any of the foreign company has permanent establishment in India and this permanent establishment provides any kind of royalty services or technical services, then in that case, for this permanent establishment, 44 DA would apply. Their fees would be credited to P&L. Whatever the expenses they are incurring would be debited to P&L. Sir, whatever net profit is being arrived, so that shall be considered as PGBP. And sir, of that PGBP, sir, similar provisions of whatever you have studied would apply, and so that will be taxed at 35%. If foreign company has any permanent establishment in India, sir, that and receiving royalty through that permanent establishment, sir, such royalty shall be taxable at the rate of 35%. Sir, another important point. See, whenever you want to claim 80M deduction, 80M, so 80M implies intercorporate dividend. Whatever dividend received is, whatever dividend paid is, whichever is lower, you will be allowed deduction. Important point, sir. Deduction will be allowed only to the extent of that dividend that you have paid at least 1 month prior to ROI. If you are paying anywhere near close to ROI, sir, it is not allowed. You have to pay at least 1 month prior to ROI, then only deduction would be allowed under section 80M. Sir, we got that point. Sir, if department wants to go to appeal, sir, can department go to appeal? Sir, yes, sir. Department can go to ITAT, department can go to High Court, department can go to Supreme Court. But for that matter, there has to be certain tax effect. If tax effect is up to 60 lakh rupees, so department cannot go to IT. Department cannot go to IT. Tax effect has to be exceeding for 60 lakh rupees. So if tax effect is up to 2 crore, department cannot go to High Court. So department cannot go to High Court if tax effect is up to 2 crore only. Or sir, if tax effect is up to 5 crore, then department cannot go to Supreme Court. Sir, tax effect has to be higher than these limits. Then only department can go to respective appellate authorities. Sir, we are clear. So what is tax effect? For example, Rahul has tax liability of 1 crore. Sir, interest 10 lakh. Sir, penalty 1 crore. Sir, can department go to High Court? Right answer is no. Sir, tax effect implies only tax liability, no interest, no penalty. Only tax liability, sir, is implied. Okay, sir, we got that point. Sir, point number 109, what it says? Sir, it is important. Try understanding it. See, section 57, if you remember section 57. Sir, expenses allowed on IFRS income. Whatever IFRS income you have, sir, whatever the expenses you are being paying, you are being incurring to earn that IFRS income are being allowed. Okay, sir. Under section 57, sir, one expenditure we are allowed, sir, whenever we have dividend income. Sir, against this dividend income, only one expenditure is allowed, sir, that is interest paid. And that too up to 20% of dividend. Only up to 20% of the dividend. Only 20% of the dividend is allowed. Whatever the interest you are paying, 20% of the dividend amount of that interest would be allowed, sir. What you are saying, sir, if you have dividend of 100 crore, and you paid interest of 50 lakh rupees, 50 crore, then in that case, 20% of the dividend would be allowed as expenditure. Only 20% of the dividend interest or 20% of the dividend amount of interest you have paid would be allowed. Sir, you got that point. Whatever the 20% of the dividend is would be allowed as an interest expenditure if you have paid interest to that extent. Okay, sir, we got that point. But sir, this 20% limit is not applicable to the dividend received under section 222F. If there happens to be a buyback and on account of buyback you have received any kind of dividend, so against that dividend you are not given any reduction. 20% limit is not applicable to that to that buyback dividend. That is the important point that I had to cover. Remember, whenever you are claiming 80M, sir, 80M has to be claimed wisely. Remember what important point is, sir. Whatever the interest received is minus interest expenditure. Sir, dividend received minus interest expenditure on that dividend. Sir, is the net dividend. So that net dividend is to be considered. Always, sir, while calculating 80M, do not take gross dividend. Always take net dividend. Whatever the dividend net of interest is, sir, that you have to take, so that only shall be considered as dividend received. And whatever the dividend that has been paid 1 month prior to ROI, so that has to be considered. Second point, whichever is lower will be applicable for, whichever is lower shall be allowed as reduction. Triple one, sir, it is not important. See, whenever there happens to be a non-citizen, then in that case the deemed resident provisions would not apply. Even if you remember, there was second basic condition for checking residential status. We had two conditions now: 182 days, 6365 days. For these 6365 days, we have three exceptions. Sir, a person going outside for employment basis, crew member of Indian ship, or any Indian person, Indian citizen. Sir, all these special provisions that do not apply to non-citizens. If somebody is not a citizen of India, then deemed resident provision would not apply. These second provisions would not apply. Sir, if he is not a citizen of India, sir, then why to check? Only check the basic conditions and check the additional conditions. No special provisions would apply for non-citizens. Sir, remember, whenever dividend is being received, sir, dividend is normally taxed at special rate. Sir, what is the special rate? Sir, if non-resident receives dividend, sir, he shall be taxed at the rate 20%. But if resident receives, sir, it shall be taxed at the rate of slab. Remember, sir, if dividend is being received via IFSC unit, if IFSC units pays any kind of dividend to non-resident, so it shall be taxed at the rate of 10%. Similarly, if business trust pays any kind of dividend, so it shall be taxed at the rate 10%. So remember this point I had covered. So business trust dividend is taxable in the hands of non-resident only and only when SPV pays tax under 115BAA. Then only dividend is taxed. Otherwise, dividend from business trust would be exempt. Point number 113, sir, what it says. Sir, this is important point. For example, we have a buyer whose turnover in preceding financial year exceeds 10 crore. We have a seller, sir, whose turnover in preceding financial year exceeds 10 crore. Sir, goods are being sold for 45 lakh rupees. GST would be 9 lakh rupees. All in all, sir, goods are being sold of rupees 54 lakh rupees, which is the invoice value. Sir, there is a clash between 194Q and 206C 1H. Sir, yes, sir, there happens to be a clash. Sir, which section will apply? Sir, 194Q will apply. Yes, sir. Whether buyer is required to deduct TDS, sir, buyer is not required to deduct TDS because, sir, the taxable value, that means the amount on which TDS is to be deducted, sir, that is less than 50 lakh rupees, so no TDS is applicable. So this would give seller an opportunity to collect a TCS. So since the seller has to check the invoice value and invoice value exceeds 50 lakh rupees, so seller has to collect a TCS on 4 lakh rupees. Sir, are we clear on that front? See, this gives us two conclusions. First of all, if 194Q is not applicable, always check for 206C1H. This is important thing. Sir, whenever TDS is to be deducted, it is deducted on taxable value. Whenever TCS is collected, it is collected on invoice value. Sir, are we clear on that front? Yes, sir, we are clear on that front. Sir, for example, if I want to deduct somebody's TDS and he has not furnished PAN, then I have to deduct TDS at a higher rate. Yes, sir, we have to deduct TDS at a higher rate. But sir, in case he has not furnished PAN, but he has furnished Aadhaar, can I deduct at TDS higher rate? Right answer is no. If Aadhaar has been furnished instead of PAN, sir, no higher rate of TDS would apply. Sir, we got that point. So this implies transfer pricing questions. Sir, if any of the person, for example, a foreign company or any foreign person, foreign associate, foreign person has given me a loan, and this loan exceeds 51% of book value of total assets, then in that case, what would happen? So this foreign company would become associate. Sir, very clear, simple point. If any of the foreign person has power to appoint more than half of the board of director and greater than or equal to one of executive directors, half of the board of director or greater than equal to one executive director. So in these cases, sir, what would happen? These two entities would become associates. Sir, we got that point. Another important point, see, this is area where most of the people get confused. See, for example, if I have listed shares of Reliance. So I sold them for 10 lakh rupees and cost of acquisition of after all the adjustment was 7 lakh rupees. Sir, my capital gain turns out to be 7 lakh. Sir, can I say that my capital gain is only 1.75 lakh? Can I say? Right answer is no. Capital gain is 3 lakh only. This 1.25 lakh benefit that you get now is only for tax calculation. This is not for capital gain calculation. Remember, this is only for tax calculation, not for capital gain calculation. That last thing, whenever you receive any kind of draft order under section 144cc, if you are a foreign company or if you are non-resident or if your order has been passed on account of information given by transfer pricing officer, sir, you are given a draft order. So you have three options to do and against that draft order. Sir, you can either accept that draft order. If you accept that draft order, sir, the draft order will become final order. Sir, it is clear. Sir, if you ignore that draft order, what will happen? Sir, draft order would become final order, and sir, you can appeal against it at CIT appeals. So you can object to that draft order. So you can object to that draft order, sir. DRP to DRP, that DRP proceedings would apply. Sir, your case will go to DRP. DRP would issue guidelines within 9 months, and after 9 months, sir, within 1 month, sir, AO has to do the assessment based on the DRP guidelines. Sir, you can appeal against the DRP at IT80. You can appeal only at IT80. Sir, but if you are no, if you don't want to, go, sir, if you don't want to go to DRP, sir, you can go to DRC, sir. In that case, sir, you cannot file appeal. Sir, you have an option to go to DRC, but sir, you cannot file appeal. So, guys, that was all about the what I should say, important pointers. I hope some of the pointers were very new to you, some of the pointers were very known to you. But sir, if you have done classes with us now, sir, you must have been aware with most of the pointers, sir. One or two new pointers might arise every time you study, but sir, most of the pointers remain same. Thank you so much for listening. Sir, if you really like the content, and do subscribe the channel, because your subscription is my motivation. I get motivated only the more you subscribe, the more you like, the more you comment. I read your comment and it really inspires me a lot. Thank you so much, guys, for coming to this, and all the very, very, very best for examination. And I will be waiting for your messages after exam. How did your exam go? And it really, thank you so much for having trust in me and watching the video till this part. Bye bye. All the very best. See you all in some other video. Till then, take care. Enjoy studying. Signing off. See Rahul.